Baldy?
Yes, I am. Yeah, we know
Hi.
some people from that neck of the woods.
I grew up there.
Well, is that right? Okay, my name's Mike Buse.
Used?
Yeah,
Oh, yeah. I know.
yeah.
All right. Good evening, everyone. Thank
My,
you.
my grandpa was him and my grandma was
Good evening, everyone. Thank you so much for joining us.
Miss Patsy.
My name is Benjamin Johnson. I'm the events coordinator for McNally Robinson Booksellers here in Saskatoon. This event is being held on Treaty 6 territory, which is the land of the Cree, Saulteaux, Dene, Dakota, Lakota, and Nakota, and the homeland of the Métis Nation. As we listen to our speakers share their words today, may we also recognize the Indigenous stories that have been shared on this land since time immemorial. It's my pleasure to welcome you to this reading and discussion of Canceling Billionaires Before They Cancel Us, The Urgent Case for a Wealth Tax by Linda McQuaig and Neil Brooks, published by Dundurn Press. Thank you so much to Linda and Neil for being here this evening and for working with us to make this event happen. Just to note, this event is being live streamed, so please be aware of the camera off to our right. Please take a moment also to silence your phones for the duration of the event. If you'd like to buy copies of Canceling Billionaires, you can find them on the signing table, just by where you first walked in. You're welcome to get them signed before you purchase it, but please remember to actually purchase it if you do so. Finally, time permitting, and I think, yeah, we'll make time for this. We will have a Q&A period following the reading, so please think of some hard-hitting questions for our presenters as well. And now to introduce our authors. Linda McQuaig is the recipient of a National Newspaper Award for Investigative Reporting and a Toronto Star columnist. She is also the author of 8 national bestsellers, including Shooting the Hippo, selected by the Literary Review of Canada as one of the 25 most influential books of the past 25 years. Neil Brooks is a leading tax scholar and former director of the graduate program in taxation at Osgoode Hall Law School in Toronto. Everyone, please give them a warm welcome.
Well, thank you very much, Benjamin, and thank you, gentlemen, for coming tonight. Yeah, and even if your questions aren't hard-hitting, you know, whatever.
Watch your hand.
Yeah, okay, so I guess I was gonna start by saying, you know, thank you, Benjamin, for the kind words, and I just wanna, can I just add one quick biographical detail that you may have left out, and that was I actually ran for politics at one point, and I ran against Chrystia Freeland, who of course went on to be deputy prime minister and everything. Yeah, so in other words, as you know, I didn't win; she won. But you know, it's kind of funny because people used to, when we ran, they used to compare us because we'd both written books about the super rich, but our books, I would point out, were very different. You know, her book was basically about how the super rich were doing a great job running the world, whereas my book was a little different. It was kind of like the book tonight that we're talking about. It was in the spirit of the protesters who marched defiantly down Wall Street right after the 2008 crash, waving placards that said, "Jump, you fuckers." So my book was more in the genre of the jump you fucker genre of books, but the super rich, a particular genre. Anyway, I'm going to talk for about 10 minutes, and then Neil's going to talk for about 10 minutes, and then hopefully we can just chat. But I guess I want to talk about, you know, we're talking about the subject of extreme wealth concentration, right? And, you know, for decades now, business and right-wing governments have imposed this, you can call it the neoliberal or the business agenda. And we all know what it is. It's, you know, tax cuts for the rich, social spending cuts, privatization, etc. And we were told that this agenda would generate great wealth and that that wealth would trickle down, right? Trickle down economics. Well, you know, it was true that did create great wealth, but almost none of it has trickled down. And after 4 decades, that has become absolutely clear. It hasn't trickled down. Instead, what we've got is we've got more wealth concentrated at the top than we've ever had in history, and a gap between the rich and the poor that is bigger than it's ever been. And that's true in both Canada and the United States. And we argue in the book that this is actually the most significant societal event that's happened in the last 50 years in many ways. And yet it's largely hidden. The rich-poor gap, bigger than it's ever been, is rarely talked about in the media. The media talks about billionaires and talks about their exciting lifestyles and everything, and occasionally it talks about poverty, but it never sort of connects those two things. But in fact, they are very much connected, because the flip side of all that money going to the top means that workers, ordinary people, the middle class, whatever you want to call it, are struggling. They're not getting the money. And so we hear a lot today about the affordability crisis, which just means ordinary people don't have money. They don't have the money they need to get by. And of course, the right always wants to blame that on immigrants. But in fact, it's not immigrants that have been making off with all that money. It's actually the people at the very top. It's the super wealthy. And this old money going to the top has also meant the impoverishment of our social programs, healthcare, education, etc. Because billionaires, they don't care about them. They just want to privatize those programs, even though they're very important to the rest of us. In fact, our social programs are seriously underfunded these days. We need to rebuild them, but where do we find the money, right? I mean, everybody's paying so much in tax, right? Well, actually, no, that's not true. Everybody isn't paying so much in tax. Almost all Canadians are paying a significant amount of their income in tax, but there's a small group of extremely wealthy people in this country who pay very little tax. And the reason for that is quite simple. The income tax, which is what we all pay, right? It doesn't really apply to them. It taxes people on the basis of their income. But the very, very rich can arrange their affairs so they don't get any income. They get all the money they need by borrowing it and using their wealth as collateral. And as a result of that, many of them pay almost no tax at all, almost no income tax at all, which is why we need a wealth tax. Because, otherwise, if we don't have a wealth tax, what basically is happening is the rich, the ultra rich, are going tax-free. And so, in a way, you can look at it, the wealth tax isn't so much to punish the very rich, it's just to make them contribute, like the rest of us contribute. And so the wealth tax, in that sense, it's not particularly radical. What's radical, when you think about it, is the system we have, which essentially exempts the wealthiest among us from paying tax. So here's the proposal, okay? Neil and I argue that Canada should have a wealth tax, okay? And it would be aimed exclusively at the ultra wealthy, okay? And what do we mean by that? Well, we mean somebody's ultra wealthy if they have a fortune worth $25 million. I mean, I think you'd agree that's a lot of money, 25 million, right? Like, I'm guessing that maybe nobody in the room here has 25 million. I don't want to make any assumptions, but so anyone with less than 25 million is not affected by the tax at all. And those that do pay it with the 25 million, it only starts at the 25 million point, okay? And you pay 1% a year on amounts above 25 million. But think about that. That means if you have a fortune of 25 million and let's say $100, You don't pay anything on the first 25 million. So you're just taxed on the wealth tax only applies to the $100. You pay $1 a year in the wealth tax. But as your amounts get bigger after 25 million, of course, you pay more. But once you reach 50 million, the wealth tax would be 2% on everything above 50 million, 3% above 100 million, etc. But the point is, this is a very, very modest tax. But even so, here's the amazing thing. Even though it's a very modest tax, there is so much money at the wealth today, so much money at the top, that even that little modest tax would collect $40 billion a year in Canada. Huge, right? I mean, that would be absolutely an enormous thing for us to have that extra revenue, the things we could do in rebuilding our social programs, our public transit, renewable energy, etc. For instance, you could take just 10 billion out of the 40 billion and make college and university free for every student across Canada. Think about that. I mean, it would be absolutely transformative of, giving poor kids a much better chance of lifting themselves out of poverty. It would make this country much more equal, fair, more egalitarian. Now, if that sounds too good to be true, it's only because we've been brainwashed to believe it's something that couldn't be possible, that it's too good to be true. We're constantly told we can't tax the rich, right? Because what? Because they're going to leave and they're going to take their fortunes with them, and then we'll be in bad shape. And this is the threat that's always made. And it sounds like a problem, but hold on a second. Here's something that we're never told. It's true the rich can leave and they can take their fortunes with them, but they'll face a hefty exit tax when they go. All their unrealized capital gains will be subject to tax when they exit, making them have to pay a very substantial tax as they go, making it very expensive. So in fact, that's not at all what they want to do, right? And so because of that, what ends up happening is they wouldn't in fact leave. They wouldn't in fact leave because they don't want to pay that extra tax. So they wouldn't leave. In fact, what they'd end up doing is paying the wealth tax the same way we have to pay income tax. It's not an optional thing. It's just something we have to do. So in fact, that would be a real solution. But of course, we're never told that. Whenever you hear about taxing the rich, you always hear about how they're going to leave. You never hear, oh, but they'd have to pay an exit tax, which could make them pay hundreds of millions of dollars that they don't want to tax. Anyway, I think I'll turn it over at this point to my esteemed colleague, who is in fact a serious person. He's a tax professor. He knows the tax system inside out. Neil, take it away.
Well, thank you. Anyway, as Linda said, talk briefly about what the book is about is making the case for imposing a tax on people's wealth, having a wealth tax on people who have wealth in excess of 25 million, and the rates would go up. So if you had $1 billion of wealth, as probably about 150 Canadians are billionaires, the rate on your wealth over $1 billion would be 8%, but it would go up from over 25 up to billionaires. The rate would be over. So anyway, it's a tax imposed on people's wealth, and it's an idea that's gaining momentum around the world, and so we're hoping over the next few years it'll become more widely known in Canada. And some government in Canada, from federal government, will seriously consider. Indeed, of course, it's a platform of the New Democratic Party. One of the planks in the New Democratic party platform is Canada should enact a wealth tax. And that's what we make a case for. So anyway, instead of talking, Linda talked about a bit about the wealth tax. There's a couple sections in the tax book that only deal indirectly with the wealth tax. And I'm just going to really briefly talk about these because we're sort of more interested in talking about whatever you're interested in. But anyway, there's a section in the book where what we talk about is we deal with what we call the philanthropy scam. And this might seem like a digression, but in fact, it's a very important story about the role of billionaires in our society. And in the chapters, we argue that we should repeal all the tax benefits that wealthy people get when they donate money to a charity. If they want to give their money to a charity, let them give it. But they shouldn't get a tax deduction for it. They shouldn't get a tax break for doing that. And we argue that indeed philanthropy as practiced by billionaires is a scam. The first reason it's a scam is because you're only supposed to get a tax concession when you give a donation to a charity. You're only supposed to get the tax credit if it's a gift. But when billionaires make a donation to charities, it's not a gift. They're buying something. What it is for them is a public relations benefit that's associated with philanthropy. And their well-advertised donations buy them recognitions for themselves. They result in them being obsequiously feted by community leaders and politicians at gala events. It gets their names plastered all over our universities and hospitals and public buildings, and establishes a very invaluable legacy for themselves and their families. It whitewashes the often socially harmful way that they, in fact, accumulated their wealth. It draws attention away from the tax system and the legal system that is rigged in their favor, and it enhances their public interest and amplifies their political voice. So that, trust me, when billionaires give the donations that we all read about to charities, they're not gifts. They are buying something that is simply invaluable to them. The second reason philanthropy is a scam, as practiced by billionaires, is they get full credit for the donation they give to charities, but in fact, only a small percentage of the money is their own. They're effectively giving other people's money. And that's because when they make a donation to a charity, they will invariably claim the charitable tax credit, which means that it'll qualify them for a refund of 50% of their donation when they file their tax return. You probably have all filed a charitable tax credit, and it amounts to a 50% refund of your donation, in effect. You give they give $1 million, and then when they file their tax return, they in effect claim the $1 million, and they'll get a refund on their taxes of 50% of their donation. So 50% of the money they're giving is actually our money. It's not their money, because they're claiming the tax credit. And so, and just to illustrate, for example, in Saskatchewan, this was back in 2007, Murray Edward made $11 million donation to the University of Saskatchewan, and he got the business faculty named after himself. I don't know if you know, but the business faculty at the University of Saskatchewan is called the Edward School of Business. That's because Murray Edwards in 2007 gave an $11 million donation to the college and got the business school named after himself. But in fact, of that 11 million, up to 7 million of it, or even more, would actually be other people's money, because he would have claimed the charitable tax donation. So he gave 11 million. He claims the charitable tax credit, which means he gets a refund for half of it when he claims the charitable tax credit. But also, more than likely, he didn't give cash. He gave shares in one of his corporations, in his oil and gas company. And if he gave shares, he gets the charitable tax credit for the full fair market value of the shares, plus, to the extent that there were accrued capital gains on those shares, the capital gains is exempt from tax if he gives the shares to a charity. which means he never pays the capital gains tax on the gain on his shares, which would be worth 25% more to him in terms of the tax savings, depending how big the thing. So in effect, for a donation of only about $4 million of his own money, he was able to divert $7 million of our money, of the government's money, to support the business school at the University of Saskatchewan. And for $4 million of his own money, he gets the business school named after himself in perpetuity. It's called the Edward School of Business forever for $4 million. Think how stupid that is. The business school actually used to be called the Commerce School. And I thought I found the number when it was, the Commerce School was, was like 1914 or something. The Commerce School was set up, and now it's called the School of Business, but it was set up initially in 1914, which means the Canadian taxpayers have been paying for that business school from 2017 up to today, and will continue paying for it in perpetuity. They have paid billions of dollars supporting that business school, and yet he gave $4 million, and it's called the Edward School of Business. It clearly, if we're going to name schools or name those things after people who support them, faculties after people who support them, it should be called the Canadian Taxpayers School of Business, with a very tiny, minuscule contribution from Edwards. So anyway, in the book, we go through all of this, why the philanthropy thing's a scam. We review a number of cases where billionaires have absolutely inappropriately tried to influence university policy. I won't go through any of those for you. But anyway, in the book, I mean, we make the case why philanthropy by billionaires is simply a scam. Also, the other reason it's a scam is that billionaires, when they give money to charities, don't give it directly to charities like you and I do. Instead, they set up a private foundation. I don't know if you know about private foundations, but they set up a private foundation which they and their family members control, and they register it as a charity, and then they give to their private foundation. And they get the full charitable tax credit and all the other concessions for giving to a charity, and then their money and the government's money, because remember, if they give $1 million to the private foundation, maybe 200,000 is their money, 800,000 would be tax savings that they got for making a charitable day. So that in that private foundation, there'd be 800,000 of essentially government money, and it sits there, and all they have to do is disperse 5% of the value of the assets in that foundation every year, and them and their families can control that government money in perpetuity. And so we argue that's enormously undemocratic. I mean, why are we letting billionaires control when and where all this government money is being spent? And so we argue that, you know, the provisions for private foundations should be repealed, and all private foundations in existence. And incidentally, there's over $100 billion sitting in private foundations, and up to 70 or 80 billion of that would be government money, and it's just sitting there idle, and all they got to do is disperse every year 5%. So we argue we got to get rid of all those provisions for private foundations, and they ought to have to wind up their existing private foundations and give the money to charities that benefit low-income people or disadvantaged people, which is what charity was supposed to mean. And incidentally, none of the money in those private foundations go to that, or really a tiny percentage. Most of it, when they give money out of those private foundations, it goes to University of Toronto, McGill University, hospitals, art museums, stuff that the rich benefit from. And so anyway, we make the case that those private foundations should be wound up and the money distributed. So anyway, there's a nice couple of chapters in the book on what we call the scam of billionaire philanthropy, which is more interesting than I've made it sound, frankly. But and then finally, we have another chapter in there that we call What Billionaires Can Learn from Finland, which is again seems indirectly related to the wealth tax. But the point we make in this chapter is that billionaires often say, well, you shouldn't tax us more because we can use our money more effectively than the government uses it. The government wastes a lot of money, and furthermore, if you tax us more, you'll destroy incentives to work and to save, and it will reduce our material well-being in our society. So what we say is, well, if that's true, if the billionaires, what they assert about taxes is true, and remember what they say is the government wastes their money, the government wastes the money we pay in taxes, and furthermore, taxing people reduces their incentive to work and save. If that's true, then if you look around the world and compare low tax countries with high tax countries, what you should find is in those high tax countries, people's quality of life is no better than the countries with low taxes. And furthermore, in those high tax countries, people's material well-being should be substantially less than it is in low tax countries. So we say, well, let's compare them. So what we did was we took the major industrialized countries in the world, 38 of them, lined them all up and compared low tax countries against high tax countries. And in particular, we compared low tax Anglo-American countries, the United States, which is about the lowest tax country in the world that we're always comparing ourselves to, the United States, Canada, the United Kingdom, Australia, New Zealand, all relatively low tax countries, compared them to the Nordic countries, which are relatively high tax countries. They collect a substantial amount more taxes than the Anglo-American countries. And so we just compared them. We had a whole series of social indicators and economic indicators, and we took them for each one of those countries and just compared them. And what we found was there is not one social indicator, not one indicator of the quality of life in a country in which the low tax countries were better than the high tax countries. In virtually every, no, not virtually, every social indicator we looked at, the quality of life in high tax countries was better than the quality of life in low tax countries. And again, I'm not going to go through them all. I mean, one obvious one is poverty. You would have thought that you'd like to live in a country where a relatively small number of people lives in poverty. So in the United States, for example, a low tax country, 21% of children live in families below the poverty line. I mean, just strikingly immoral in a prosperous country. In Canada, it's about 10%. In Finland, we use Finland to compare United States with, because the United States is about the lowest tax country and Finland is one of the higher tax countries. In Finland, it's 3%. It's just essentially noise. I mean, children do not live in poverty in Finland, basically. But if you don't want children living in poverty, you got to pay for it. And the way you pay for it is through your tax system. But it turns out taxes are very effective. Billionaires argue they're not effective. They are effective. Finland, with high taxes, has literally no poverty. And so we do it for every social income inequality, wealth inequality, gender equality, health equality. For example, in the United States, the life expectancy in the United States is 76 years. In Canada, it's 81 years. I mean, everyone wants to compare us to the United States. In fact, on average, we live 5 years longer than they do in the United States. I mean, I would have thought that's an important indicator of sort of quality of life. As Paul Krugman said, an important factor in the quality of life is not being dead. So in Finland, it's even higher, the life expectancy. So every measure, we went through, I think, 17 measures. I'm not going to go through them all. I'll just mention one final one. Democracy. We looked at the democracy in the United States. In fact, as an indicator of how democratic a country is, in the United States, it's so bad now on the sort of most important study of cross-nation comparison of democracies. The United States is called a flawed democracy. And it's in there with Botswana and Malta and Israel. It's a flawed democracy, whereas Finland is one of the most flourishing democracies. But another one is happiness. There's these surveys across all countries in the world about how happy people are. The United States turn out in 23rd place. We're in 16th place. The Finns have been number 1 for 7 years in a row. That is, you pay a lot of taxes, you tend to be very happy. So I'm not, anyway, just let me conclude then by this, with this philanthropy thing and this, and the taxes collected by quoting Rutger Bregman, who's a Dutch historian. At the World Economic Forum in Davos, he was asked, he was on a panel where the panelists were asked, how should the world prevent the social backlash from growing income and wealth inequality? And the answer, he told, the room was full of billionaires. The room was full of billionaires. This was the World Economic Forum. And the answer, he said to them, is very simple. First, stop talking about philanthropy, he says, and start talking about taxes, taxes, taxes. All the rest is bullshit. So thank you very much. So that's what we talk about, right? Tax school.
I just paid mine.
What's that?
I said, I just paid mine. Whatever. Tax season's a great time for tax. So Linda, you ran against Krista Friedland, not as a liberal, and she won, or is that where you ran?
I was, no, I ran as a New Democrat
yeah.
and she was the liberal.
Okay,
Okay. If we have if anyone in the crowd has questions, please feel free to raise your hand. I can bring the mic. Perfect.
What will it take for mega churches to be taxed?
Good question.
For mega churches?
Yeah.
It will take a revolution in the US probably, but it's a terrific idea. Do you want to talk about taxation and how they're all exempt?
Yeah, anyway, it's a huge problem. All the churches are exempt from property taxes, income tax. They don't pay any taxes at all, right? And yet they're sitting on very valuable property. I mean, it's a huge scandal. It's that the churches aren't assessed, at least on property tax, on the value of their wealth. They should be paying tax on the value of their wealth, the churches. Anyway, it's a huge scandal that the churches aren't taxed, and the mega churches are the worst offenders, of course. They collect all that money from donations and spend it on high living and who knows what. Anyway, good question.
By the way, do you want to sit so we can, yeah, right.
Yeah.
I mean, maybe we should just
come a
sit
little
up.
closer so that we don't have to do the microphone thing.
Sure. We do have some people watching online as well, just so we know. Yeah.
Okay.
I can pass off the microphone to you.
Just wondering what are your thoughts on a guaranteed income?
Well, it's interesting. We certainly, the idea of greater equality is terribly important. On the other hand, is that the best way to achieve greater equality? We tend to, in some ways, we have a social welfare system which is designed to prevent anyone from being homeless or, having a basic standard. And we should strengthen that social welfare system for sure. Whether or not a basic income is the best idea, I'm inclined to feel that I'd rather strengthen our public programs like healthcare and education and social supports. I'm afraid that if you simply have a system of directly paying people a guaranteed income, well, first of all, you can be sure that it would be a very low level. That's basically what's being pushed by the business interests that favor it, right? So you'd have people kind of locked in at this lower level, whereas what we think would be better is to strengthen our healthcare and education system, and remove all the impediments and the unfairness in the have stronger labor laws so that working people can do much better.
Wow.
I don't know, Neil.
Yeah, anyway, Linda and I have talked a lot about this because you do hear a lot about guaranteed annual income. And I think we've sort of come to the view that again, as Linda mentioned, what you should do is we've got a social safety net, and what we should do is just strengthen it rather than have a brand new sort of guaranteed income that displaces all of those. We ought to give disabled people a better income. We ought to give them unemployed people a better income, but it ought to, and our social assistance payments. And just to go back to Finland, if you want to solve the homeless problem, I don't think you give people a guaranteed income. I think what you do is give them a home. And that's exactly what Finland did. They gave them a home. Everyone gets a home. And they don't require you to be not on drugs or anything. Everyone is entitled to a home. And then what they discovered is when they give them a home, 80% of the people, after a short period of time, they get a job, they get their life together and so on. So I think we're more in favor of sort of strengthening the public sector so that everyone has a sort of safety net rather than try to deal with it with the.
Yeah. I mean, I would even just add to that, like, I think people, like the Finland example is so exciting about what they did for the homeless, and it's quite famous how successful that has been. And the idea that, if you give people a home, the notion that we often hear here is that, oh, well, you give them a home or whatever, they'll be out in the street again in a few months. But in fact, the truth is, people are really wanting to do well. They want to take care of themselves. They don't want to be living in a gutter. They want to have a life. And yet so many of them have so many strikes against them to begin with. And so if you give them that chance, if you have that kind of confidence in them, and then you provide sort of supports around them, it's just unbelievable how well people do with it. There is a kind of innate desire to be part of a functioning community, to be your own person. And in a sense, having a guaranteed income, I almost worry if it might make some people feel they didn't deserve what they had, or they don't fully belong. Whereas if you give them the kind of social supports like they have in a place like Finland, they can kind of make it on their own. And I think that's better for them and better for everyone.
Sorry. I have a question from the chat actually on the computer here. I don't know if you guys are familiar, but one of the comments on here is asking, I'd like to hear your raw, unfiltered opinion of Saskatchewan philanthropists, Irene and Leslie Dubé. And they apologize for any feathers ruffled by this question. I don't know if you guys are familiar with the Dubés at all, but their names are on a decent amount of things around town. So
we apologize that we don't know. Should we? Is there something we should know about them?
No, they're just this person's just wondering about your opinion about them. I would imagine it'd probably be something similar to the philanthropy, what you've kind of already talked about.
Yeah. But I mean, what we do find, I'm sorry we don't know about that particular case, but we did quite a bit of research into the philanthropy thing and the private foundation phenomena. And it is, as Neil was saying, it's just phenomenal. People like Seymour Schulich, that's a name that you see in business schools across the country. What does he have in his foundation? 300 million or something? Anyway.
$1 billion.
there's just so much money in these private foundations, so little control. Like, I mean, there's the billionaires themselves control the foundation, and they can employ members of their family at virtually unlimited amounts. It's and there's no regulation of it. Like, it's just an incredible scam. So in fact, we did some calculations and concluded that in fact the public would have actually been better off if Schulich had never, or any of these people had never established foundations. If they had simply paid their taxes, there would be much more money actually available and going into these charitable causes. And don't forget, yeah, I mean, the other thing we found was that you know, as Neil was saying, we tend to think of charity as something that goes to poor people. But in fact, we did a study of the 50 largest private foundations in Canada, and we looked at where they gave their money, and they gave almost nothing to the poor. They gave 6% of this is just the money that they are forced to distribute, right? So, you know, most of the money just sits in the foundation, but even when they're forced to distribute it, they give almost nothing to the poor. They gave 1% to Indigenous causes. And yet when they advertise, they talk about how important it is that they need various tax breaks because all the food banks that need to, well, they don't give, it turns out they give almost nothing to food banks. They give, as Neil was saying, they give to hospitals and primarily universities, and not just Canadian universities. They give a lot to American universities, universities in Israel, like places that are important to them, which is fine, but they get all these tax breaks for doing so. It's effectively public money.
I'll just say that I guess what upsets us is when we see all of these wealthy, rich people with their names plastered all over our public institutions, hospitals, universities, and so on. And they're doing it with government money. It's not their money. Like, what we should be naming our institutions after is people who inspire us, Canadian heroes who've inspired us on all sorts of fronts. Why should we plaster the names of all these wealthy people all over our buildings? And maybe it's because you might say, yeah, but they're generous. And so they're generous. And so they deserve to get the name up. Our point is, they're not so generous. They're giving other people's money because they're claiming the charitable tax credit. And they're claiming these other tax concessions for charitable donations. So if they want to give their own money and get their name up in lights, fine. But that's not what they're doing. They're giving other people's money, basically, and getting their name up in lights. So
I think that is the case with the Dubés, I would imagine. So maybe just kind of being aware of that is good. So
I wish
Prominent around the city as well.
yeah, I was gonna say like the certain parts of the hospital are named after them. I know mental health centers, places like that.
Actually,
So, yeah.
it's funny, you know, in Toronto, you go into a hospital now, and every corner of the hospital has a different rich person's name in it. You know, you'll go into the Eaton wing but even like a bathroom will be named after a billionaire. Like, it's quite unbelievable.
I've got a few questions. I can probably hold this mic for a conversation. But so how would you determine $25 million is a big number, but if you look at it, there's probably lots of people that would have that wealth throughout like different properties and such, right? But it's not like many people are sitting with $25 million in their bank account, right? So who's in charge of making that assessment, and is it on their total? Is that where you'd like that to be applied? And who's in charge of making that assessment? And then who's in charge of subsequent reassessments, and how does that take place?
Well, yeah, I mean, you're absolutely right. I mean, it's not easy. I mean, what we would require is everyone with assets of over 25 million to, in effect, provide the government with a balance sheet. They, in effect, have to say to the government, here's all the things we own, and here's the value of these things. Now, some of those things are hard to determine. Private companies, artwork, all of these things, but they do it all the time. They do it for the purposes of insurance. They do it when they break up a company, when they sell a company, when they get divorced. It all gets valued. We've got appraisers who value them all. And so we would require them to file the financial statement. And then, of course, it would be up to the revenue department to decide whether or not they've assigned a fair market value to their assets. And our revenue department does that all the time in different contexts. And it's a small number of people, like people who with wealth above 25 million is the richest 0.1% of Canadians, 0.1%. There's 19,500 of them. So it's not a big number. And yet we're collecting a lot of revenue from. But anyway, and so we would require Revenue Canada to audit them regularly. We would give Revenue Canada more resources and require them to audit them regularly, each one of them individually. And once they've done it once they've filed the first balance sheet and you kind of worked it all out, then every year you would see whether or not, their assets are appreciating at whatever the rate of return on the particular assets generally are. So it's difficult, but I'll tell you, compared to how difficult the income tax system is, it's pretty simple.
So the whole naming thing is a way of whitewashing. That's
Yeah,
whatever. That's all that
exactly.
is. Do you know the story of Alfred Nobel and the like the Nobel
Yeah,
Peace
yeah,
Prize
yeah,
and
yeah,
stuff,
yeah.
right? Like they mistakenly had his
Yeah.
brother's obituary, and then they said horrible things about him in the newspaper when they
Yeah.
mistook his brother for him. And then he decided, well, hey, if this is how I'm going to be remembered,
Yeah.
I need to start a foundation. And now the Nobel Peace Prize is right, but he
Yeah.
was the creator of dynamite
Sure.
and whatever, right?
Yeah.
So that's what a lot of this stuff is
Sure.
just a
No, that is absolutely true. And we talk in the book about examples of people, billionaires that are involved in, well, I think Schulich is one of them with
Well, or
mining.
Edwards.
Yeah. Well, but I'm just saying, like, billionaires that have, records of real problems with things they've done overseas, claims of abuse of local populations in Africa and stuff. And reports then come out to the public, they're terribly embarrassed. Then they make these huge donations, and suddenly that's what they're talked about in the media. So when you think about it, it's a wonderful thing for them. Like, they have all the money in the world, they can buy all the material pleasures they want, but they can be saddled with a bad reputation for all the terrible things they've done. Until they give a little bit away and get feted in the media. The media just loves stories of billionaire philanthropy.
Personally, I think most charities are abusing a lot of the donations. They have big galas and this and that and other things. Like personally, I sit at the Salvation Army Christmas kettle I give a few hours of my time. I go and walk dogs at the SPCA. I know that I'm making a difference there. I think it's shameful how much money that goes to charities actually doesn't wind up in the charity and just supports bureaucrats that are working.
Well, we argue that, like, everybody makes a contribution to charity, you get about a 50% reduction if you're, well, according to what tax bracket you're in, but a maximum of 50%. We argue that there should be a limit on how much of a tax break anybody can get. Maybe let's set it at what, $1,000 a year? That most people, that's about as much as they can afford to give to charity. So cut it off. Nobody like we encourage people to give money to charity, but the tax break, they can only get up to $1,000. So all of a sudden, that would mean all that philanthropy, all that buying of good reputation and everything. They can do that, but they're not going to get any tax back. Wouldn't that be a great idea?
Anybody else? I've got some more.
We have time for just like one more before we wrap up.
So I guess the other thing would be just who's in charge of that extra $40 billion, because out west here, we don't feel very well represented by our government and their tax, the way they're spending our tax dollars to begin with. And that worries me. They give $2 billion to the Ukraine, and in Saskatchewan, we have probably one of the largest Ukrainian diasporas outside of the Ukraine. They're great people, and I want to support them. I don't want to see war or people suffering anywhere. But what happens once that money lands in Ukraine? Christopher Friedland there is now there with the purse strings holding the bag of money, and it's just like.
No, you're look at, you're raising a very good point, okay? And you know, now the Carney government is going to divert so much of our tax money to militarism, to building up our military. I personally find that very unnecessary and dangerous and diverting money from important social needs. Anyway, the question of how the 40 billion would be spent is a good one, okay? And we had sort of thought, well, we're in a democracy, it should be up to the public. But, you know, we've come around to thinking, because a number of people like you have raised that point about can we trust government to spend it? We've come around to thinking that maybe the 40 billion should be earmarked for social benefit, you know, some kind of social benefit. And in fact, Bernie Sanders, you know, the US Senator who has been proposing a wealth tax and who has been a big inspiration to us. He has a new wealth tax proposal out that very specifically specifies where the money will go. And it's all to very important, you know, social causes. And in fact, he says in the first year of the wealth tax, it should actually be in a, you know, before we get into giving to all these social causes, let's make a payment to every person in the country. It was worked out to something like $5,000 per person, just to sort of even things up a bit, you know. So my point is just, yes, you could absolutely specify that the 40 billion has to be spent on things that are worthwhile.
And if it was getting there, that'd be great. But once again, unfortunately, I think there's oftentimes those institutions get so top heavy with bureaucrats that it doesn't wind up in the proper places. Like, have you ever been to Cuba? I spent time in Japan, and like you say, with the free education, Cuba doctors everywhere. They're driving my taxi cabs and stuff. They're very, very well educated people, but the only people there that are eating well is the bureaucrats, and everybody else is suffering, and it's incredible suffering. I've been to their grocery stores. It's incredible suffering. And I just don't know. I commented on a picture of Fidel Castro a couple of days ago online. He was wearing 2 Rolexes. I guess that was his. He wore 2 Rolexes, one for the time in Havana and one for the time in Moscow. And whatever. I made a comment just to be smart that's the fashion amongst most communists, is to wear both their Rolexes on the same wrist. And people stuck up for it and said at the time that was an affordable watch, whatever. In the 70s, they were only like $250, which is only like $3,000 now, which, I don't know, $3,000 watch is still pretty far out of reach for me, right? And I think it's like, I don't know, I'm from Swift Current, which is health district #1 in Canada when it comes to universal health care in the world. That's where it started. And if I'm driving in the, like, I'm all about looking after my neighbors and stuff. If I get stuck in the snowbank in the wintertime driving the country, I can go to my neighbors. break the window and get in, they'd be happy to see me. I wouldn't even have to break the window because the door is unlocked. And like, there's such a socialist vibe and feeling to this province out of necessity. But there's, I don't know, like,
Well, you're a lucky man.
like
You're a lucky man.
it is true, but and like I say, if I just didn't see some of the ways that the government is spending the money that they receive from us currently, it would be easier to want to see them collect more taxes.
I hate to cut everybody off. We're pretty much at time here. But I'm sure we can continue the discussion after if people have more questions or want to talk to Neil and Linda. I just wanted to thank you both so much for being here. Thank you to our audience as well.
Pleasure.
Yeah, and yeah, if you'd like to buy a book, we do have them by the just by where you walked in. So a round of applause for you guys. Thank you so much once again.
Thank you.
Well, thank you guys.
Yeah.
All right, awesome.
Okay.